Okay, folks, welcome to Coffee Talk for December the 4th. So, going into the new trading day, I think the market's behavior of late is healthy. We spoke about this over the weekend that sector rotation is the lifeblood, the mother's milk of any bull market. And we saw the mid caps, we saw the Dow, we saw the small caps outperform last week. This week, well, it's the triple Qs. Both the equal weighted and the market cap weighted triple Q names are doing very, very well. They led the charge up higher, and they're leading the charge up again higher today. And they could quite very well close out the year as the leadership group. So, going into the new trading day, we're seeing that the NASDAQ is up 0.63%, new all-time highs. The E-minis up just shy of a third of a percentage point, whereas the mid-caps, they're up, but obviously they are lagging a bit here. And lastly, with the Russell 2000, that's up on par with the mid-caps. So again, sector rotation is the lifeblood of any market, and that's exactly what we're seeing. So a lot of people are out there saying this market can't continue up higher. Yes, it can. Yes, it can. Should it? That's a different conversation. For example, as we head into the new trading day today, we are more expensive than we were back in October of 2021 as measured by the Shiller PE ratio with a trailing PE multiple of 38.63. Does that mean you dump stocks? The market's not telling you that. The path of least resistance is clear, it's defined, it's up. Now, we've done speculating to the short side in names like AppLovin. And to be honest with you, this thing's got RSI greater than 90 on a monthly and weekly chart. It had RSI greater than 90 on a daily chart. It's still back above because it dropped down below 80, came back above 80, closed out yesterday with an 84 handle on RSI. Guess what? It's up in the pre-market. So what's the sense of fighting the tape with your core positions? It doesn't make any sense. Now, are there reasons why we should be looking at the exit door? Yeah, there are plenty of reasons why. For God's sakes, we have an administration trying to get us into a nuclear war. We're lobbing missiles into Russia, and that is fact. That is not conjecture. But the market is a reflection of human nature. Again, the market is a reflection of human nature. At current, investors are optimistic, but it's fleeting. Case in point, yesterday with the news that there would be martial law in South Korea. I consider myself to be pretty well read on market events. I did not see that one coming. Granted, it didn't come to fruition, and there will be a day of reckoning for the markets. But during the seasonally favorable period of time, now does not appear to be the time to go shorting equities. Taking a look at energy prices, oil, which had a good day yesterday, was not reflected in the energy markets, but it's pulling back today. You need you need oil prices to move up higher to get a bid on energy stocks. We're watching them. We booked profits yesterday on CSX. Let's see what that's doing in the pre-market. I think we were wise to do that because it looks like we're seeing a little bit of weakness in the pre-markets. KARO, which we are long of, we built this position last week. We're up about 15% on it at current. That is doing fairly well, not doing anything in the pre-market, but the path of least resistance appears to be to the upside. Mr. Softy, which is extremely expensive, moving up higher. Now you're looking at a stock here with a price to sales of roughly 3. Same thing with Apple. Yet the path of least resistance remains to the upside. Let's check in with natural gas. Natural gas falling 1.51% today. I think this is in the trading range and should be treated as such. Bitcoin pre-market, it's up, coming off the highs of the session and closing it out with the 10-year yield. It continues to move up higher, bonds lower. There are your mid caps. They've gained a little bit of steam to the upside since we've gone live here, and volatility down again. Now, I will warn that volatility hit at least a volatility index, not the front month contract on the /VX. Hit very, very strong support levels. Strong support levels last seen just prior to that big sell-off in the market back in early July. We all remember that one. It's easy to forget. Don't. Here's the daily chart. of the VIX. I went over this last night on Market Wrap with members. That's posted in the members area and in your email. You can see that we are in a descending wedge formation. We've been here before. Back here in June, July, descending wedge formation. Granted, we bottomed out at a lower price point at 11.84. Then we broke out. And here is the rally in the volatility markets. And you had the inverse price action on the S&P 500 in early to mid-July, actually early August. It was the big spike in volatility. But it built. It spent the entire month of July consolidating, then building. And then that first week of August is just exploded. Could we be setting up for the same thing? Who saw this one coming? This is when we had the uninversion of the yield curve. But the yield curve has since quieted down a little bit, taking some pressure off of equity investors. You can see that the mid caps, this is a 15-minute chart, have now broken out, did a retest. Looks like we're going to get some follow through to the upside. So it looks like a promising morning. We do have economic data coming out this morning. The ADP employment report, that comes out at 8:15. Then we have a couple of Fed heads coming out, 8:45 and 9 a.m. 9:45, we're going to get the Services PMI, Purchasing Managers Index. Any read above 50 is a sign of expansion. Any read below is a sign of contraction. Some services, any read above 50, same deal. Contraction, below, I think I just misspoke. Any read above 50 on ISM services is a sign of expansion. Below is contraction. We also get factory orders out today. And 1:40 this afternoon, we get the Honorable Jay Powell coming out at 1:40. Then we get 2 p.m., the Beige Book coming out. So a lot of data coming out today, a lot of catalysts that could drive the market. So keep an eye on your news feed. Have a profitable trading day. Enjoy your coffee, and I'll talk to you later. Be well.